This video is intended as a short introduction to the new PDS Development Appraisal Program. Once PDS has been installed on your computer, an icon will display on the desktop. We double-click this icon to launch the program. Whilst launching, PDS will check to see if your computer is online, and if so, check for any program updates. If an update is available, this will automatically be installed prior to launch. Once launched, the main PDS window will display with the Projects menu open. The Projects menu is the best starting point, as it allows you to either create a new appraisal or open an existing project. For a new project, there are three standard templates available. A new investment sale project. This will create an appraisal based on rents and yields, land value, building cost, and other outgoings. A direct sale project is similar and consists of direct sales, residential and so forth, again with land value, building costs and other outgoings. The mixed use project is a combination of these two. To reset the project, go to the Projects menu and click on New Blank Project. In this example, we are not going to use the existing templates that we have, but instead set up a new blank project and insert the sections that we need directly in the empty form. What we have here is an empty sheet, so the first thing we need to do is enter some elements for our appraisal. This is done using the Insert Section button. Click on this and we can see the categories that we can enter here. First thing we need is an investment value. Click on investment value and an investment value section will display. Here we can enter the rental values. Say we have offices of 20,000 square feet at £22.50 a square foot. We can also insert further rental categories. Let's say we want to include a retail element. Click on Insert Rental Value. We now have a separate rental, retail. Give it a title as before. Let's say we have 6,000 square feet at £32.50 a square foot. If we want to change the order of these rentals, we do so by clicking on either one of the rental value buttons, and I can click Move Value Down. There is no limit to the number of rental values that can be entered here. The Units button allows us to set the unit type for each rental that we are using. We can also set it as a fixed value in cases where an area is not used and a total value is assumed. We are starting to see some results. We have a rental value of £450,000 in the case of the offices, £195,000 in the case of the retail, giving a total of £645,000 per annum in total. If you wish to use rental deductions, then click on the Deductions button and you can bring into play rental deductions to deduct sums of money, percentages or amounts from the rental prior to capitalisation. You can provide additional rental deduction categories if you wish. In this case, we do not wish to use rental deductions, so use the button again to disable this facility. In order to obtain a value, we need to capitalise the rental value, in this case £645,000, at a specified yield. In this case, let's use a yield of 8%. The £645,000 has been capitalised at 8%, in other words multiplied by 100 and divided by 8, in order to give a gross capital value of £862,500. The capitalisation factor can be entered either as a yield, a percentage yield, or as a year's purchase. In this case, it is represented as a percentage yield. We will need to enter some purchaser's costs. The capital value here, £862,500, will be subject to purchaser's costs of, say, 6.5%. The method of calculation is significant. In this case, it's set to percent of capital value net. This is because the purchaser's cost element is already included in the gross capital value. Our total net revenue is around 7.5 million. In addition, we need to provide fees. Let's put 10% for letting and 5% for legals on letting. These are a percentage of the first year's rent, 1% for investment sale agents, and 0.5% for legals on the investment sale. These are a percentage of the gross capital value. More fee categories can be included if required. Sales fees can be entered either as a percentage or an amount. Having entered the investment sales, let's now enter some building costs for the offices and retail. We can either insert a new building cost section directly, or we can insert a building cost based on the information we have already entered. Duplicate as build cost. In this case, it will ask us for a gross to net ratio. Let's enter 80%, press enter, and a new building cost section has been added with the offices and retail element included and their net areas converted to gross at an 80% gross to net ratio. Let's now provide some building costs. The offices will cost £150 a square foot to build, and the retail will cost £125 per square foot. We can include fixed building costs such as demolition at £95,000. We can also include contingency at, say, 5% and professional fees at, say, 12%. The fee elements can be entered either as percentages of the total building cost or an amount. There is no limit to the number of additional categories that you can add for either building costs themselves, fixed building costs, contingency, and professional fees. This is especially useful in the case of professional fees, as you may wish to do a more detailed breakdown. Let's now introduce some marketing costs. To do this, insert a section called Other Outgoings. We can use this for marketing. And let's provide a value of, say, £25,000. We can add further categories here if we want, and in this case I want to move this further down the list, so I can use the Edit Section button to move the marketing section down underneath the building costs. An important element we have not yet included is land value. But before we do this, it would be useful to put in some interest rates and some timescales. For now, let's put in a straightforward interest rate of 8%. This is found towards the top of the list. Timescales are provided at the top of each section. So in the case of the investment value, let us assume a sale date of month 18. Going down to the building costs, let's assume that the building costs take place between month 3 and month 15, and in the case of the marketing costs, let's assume that they take place between month 6 and month 17. If you wish to apply individual timescales to individual items, then you do this by using the timescale button. In the case of the demolition, let us assume we want to put in a separate timescale for that. We click on the timescale button and we make it timed. This provides an individual timescale for just the demolition, which I shall put in as occurring between month 2 and month 5. Now let's introduce the land value. This is a separate section, land value, consisting of a site cost, the stamp duty, purchase fees and legals on purchase. Let's put in a land value of say $1 million, stamp duty of 4%, agents fees of 1% and legal fees of 0.5%. In the case of the land value, we do not need to change the timescales as they are already set as occurring in month 1. At the top of this screen is displayed a summary of your appraisal showing revenue, outgoings, profit on cost and profit on revenue. Clearly this is not a very profitable scheme, as the £1 million land value only yields a profit on cost of 2.74%. Instead of entering the £1 million land value, let's target it, and this is done by right-clicking on the land value, the £1 million, and entering a residual profit on cost target. Let's use the 20% figure offered here. This only gives a land value of just over £100,000 in order to achieve a 20% profit on cost. Let us reinstate the land value of £1 million and change other values in an attempt to increase our profit margin. We could, for example, increase the offices to £25 a square foot. This is giving a 10% return. On the other hand, we can target it in the same way that we did for land value. Right click on the £25 per square foot and enter the 20% profit target, and it will indicate that we need something in excess of £28 per square foot in order to achieve our desired profit target. Alternatively, we can put our office rental back to £25 a square foot, and using the residual facility again, we can include that in the residual targeting, and clicking on the retail rental we can include that as well. This has included both the £25 and the £32.50 per square foot in the residual calculation. Entering again our target of 20%, we can see that this changes both values, keeping them in the same proportion, giving a target office rental of £27.24 a square foot, and for the retail £35.41. At any time we can display the cash flow element of our project by using the Show Cash Flow button towards the top of the display. This will turn on the cash flow element of your project, showing at the top the summary cash flow, and moving down the list the various cash flow elements for your revenues, land value and building costs. We can view both our appraisal and cash flow in a more concise format using the print preview facility. This also allows us to print and export our report. Here we can see the development appraisal showing the rents and yields as an investment value, showing total revenue and total outgoings for the investment value. In addition, we have our land value and total, our building costs, and our other costs, in this case marketing. A summary of the interest calculation is displayed here, along with summary statistics for the entire project. If we view the cash flow, we can see that this is laid out in monthly format, showing monthly costs and revenues. And if we move down the list, we can see the summary cash flow and interest calculations. We can alternate between the appraisal and cash flow view by either clicking on the tabs at the bottom of the sheet or using the button here, which alternates between viewing the cash flow and the appraisal. The easiest way to print is via PDF. Click on Print Preview as PDF and both the appraisal and the cash flow will open in a PDF viewer. A PDF viewer is normally supplied with your computer. If not, they are available as free downloads. Here we can see the appraisal report at the top, followed by the cash flow. To print the report, use the print facility available within your PDF viewer. You can also print using Excel. On the Send to Excel menu is the item Print Preview in Excel, which will create the report within Excel and send you direct to Excel's Print Preview mode. You can, if you wish, use Excel's own page setup options to refine your report. To return to PDS, press the Close Print Preview button and Excel will close and return to its own Print Preview mode. You can also export the appraisal and cash flow to Excel. On the Send to Excel menu are the options to create a workbook either with or without a password. Let's use the no password option here. This will create an Excel report with your appraisal and your cash flow showing as separate tabs. It should be noted here that this is text and numbers only. Formulae are not exported. We can also incorporate charts in our Excel reports. On the Send to Excel menu, you can choose the type of chart that you would like. In this case, let's choose column charts. In any of the available Excel reports, a charts element will be added. See here that we have a chart tab which contains interest balance graph, a period total graph, and a balance carried forward graph also. The options menu allows us to set items such as fonts, font sizes, margin, orientation, and report zoom. It also allows us to enter title and notes for our appraisal and cash flow. The title displays on top of both the appraisal and the cash flow, and in the case of the appraisal we can add notes if we wish. In the case of the notes, let's paste a bit of Shakespeare. We can now see the title appearing at the top of the report, and at the bottom of the appraisal we have the notes that we wish to add. To exit Print Preview, either click on Exit Print Preview or click the Close button at the top of the form. To save your project, either use the File menu and click on Save Project, or use the Save button at the top of the form, provide your file name, click Save, and the project is now saved for further use.